Here's a bold statement. The handbag market is about to get a whole lot bigger, and Tapestry Inc. is leading the charge with a $10 billion vision for Coach. But here's where it gets controversial. Instead of focusing on who bought handbags last year, CEO Joanne Creviseret is redefining the market by asking who could have bought them. This shift in perspective isn't just ambitious. It's a game changer that could expand Tapestry's reach to a staggering 1.9 billion potential customers across the globe. That's right, 1.9 billion people in markets where Coach and Kate Spade currently hold a mere 0.6% collective share. And this is the part most people miss. By reimagining the consumer base, Tapestry believes it can unlock a 10 times growth opportunity down the line. In an exclusive interview with WWD, Crevoiserat explained, "This approach allows us to expand our brand reach across geographies and generations. It's not just about selling more bags. It's about capturing the hearts and wallets of a new generation of consumers, particularly with Coach's surging momentum. To make this vision a reality, Tapestry is unveiling its Amplify strategic plan, a 3-year roadmap designed to supercharge growth. The goals are bold. Push Coach revenues to $10 billion, up from $5.6 billion last year. Revive Kate Spade's growth by fiscal 2027. Expand operating margins to over 22% by 2028. And return $4 billion to shareholders through share repurchases and dividends." Here's the controversial part. Tapestry isn't just relying on traditional market strategies. Instead, they're betting on emotional connections, fashion innovation, and compelling experiences, all while fostering a consumer-obsessed culture that's agile and forward-thinking. But is this enough to win over younger shoppers, who are increasingly picky about the brands they support? Crevoiserat thinks so, pointing to the 25 million women globally who turn 18 each year, a prime demographic for handbag purchases as they transition from high school to college. "We want to capture this consumer as she enters the market," she said, emphasizing the potential for lifelong brand loyalty. Todd Kahn, Coach's CEO and brand president, echoes this sentiment, drawing parallels to Coach's past success in expanding the luxury market. "When Coach launched accessible luxury 20 years ago, we brought new people into the category," he noted. But can history repeat itself in today's crowded and competitive fashion landscape? Sandeep Seth, Tapestry's chief growth officer, believes the key lies in redefining the target market to focus on specific consumer opportunities, like young women entering adulthood. "As we increase consumer participation, we see exponential opportunity," Seth said, highlighting the enduring loyalty of Boomer and Gen X shoppers who've stuck with Coach for decades. Here's a thought-provoking question. Can Tapestry truly balance timelessness and inclusivity while avoiding the pitfalls of discounting, which can dilute brand prestige? TD Cowen analyst Oliver Chen thinks so, praising the company's focus on demand creation and innovation. Meanwhile, Kate Spade, under the leadership of CEO Eva Erdmann, is undergoing a revival, aiming to reconnect with consumers by simplifying its offerings and strengthening product storytelling. "We're not fixing a broken brand," Erdmann clarified. "We're unlocking underused assets that millions already know and like." But will this be enough to reignite brand heat and create new icons? As Tapestry moves forward with its ambitious plans, one thing is clear. The company is playing the long game, betting on sustainable growth and shareholder value. But in a world where consumer preferences shift rapidly, can they stay ahead of the curve? What do you think? Is Tapestry's strategy a recipe for success? Or are they overestimating their ability to capture a new generation of shoppers? Let us know in the comments. This is one conversation you won't want to miss.